Hello, my name is Paris Gray, working hard to be your favorite Paris. I am an insurance broker at Bill Gear Insurance, and we'll jump right into it. Today, we are talking about the P in the Paris acronym. If you're not familiar with the Paris acronym, go ahead and check out some of my other content or drop your email address, and I will send you an email and tell you a little bit more about the full Paris acronym. But today we are talking about protect your income. And how are we protecting your income? We are protecting your income with some type of insurance product. Now, I am focused on whole life insurance because most individuals don't have any life insurance outside of their employer. If you only have life insurance through your employer, that is term insurance, and it is only good for while you are employed. Less than 2% of individuals use their life insurance through their employer. Think about it. If you don't die in a accident or something like that, if you get a terminal illness, sometimes even if you want to or plan to, you're not able to work all the way until you pass away. Also, if you get a critical illness, do you really want to work until your last day? So that is something to be mindful of. And it jumps us right into the question that I have here. I'm going to move through information. I'm going to show you my Excel document that also is something that I can send to you to help you calculate this. But we are really going to lock in on this question. I have some homework that you'll see in the description, but we are going to talk about if your paycheck stopped tomorrow, what would that change in your household? So life insurance is definitely a vehicle that can be um, paycheck protection. And I tried to tell you just a few seconds ago that I wouldn't go through the whole Paris acronym, but it's really fitting and it's great to go through. So let's just do that. Actually, let me see. I think I'm going to put it all on one banner and then we'll be able to talk through it. Let me see if I can do that. Yes, I can. That's amazing. So here is the Paris acronym. P, what we're going to focus on today is protect your income. Um, the question that I'll add back to the screen is if your paycheck stopped tomorrow, what would change in your household? A is add up debts. You're going to think about mortgages. You're going to think about your future college fund for your children or your godchildren, wedding funds, those type of things, debt and future obligations. R is for remember final expense. I always say at minimum do 15K. I include dreams and legacy. That's one of my favorite parts. I'm not even going to go off on a tangent about that. And S is for subtract your savings. And subtract your savings is the only time where you really get some real value for having term insurance through your employer because it is a great razzle dazzle. It just shouldn't be your only vehicle. So let's go back to here. If your paycheck stopped tomorrow, what would that change in your household? So, from what I gather from talking to people and getting feedback, a lot of times folks think about life insurance as final expense, and those are two different things. We won't go into the two different products, but really what I want to make clear here is life insurance is not just about when you pass away and legacy building. Life insurance has different um, products and different riders or different benefits, if that's easier to understand, that can help you while you're still living. If you've already taken care of or remember the final expense, then it is not too late to think about adding on another product to upgrade the products that you already have so that you are taken care of all the way until you age until you live until the age of 100. We want to protect your income until the age of 100. So what are some reasons, Paris, my income might stop tomorrow? Well, maybe the company you work for closes down. Maybe you are fired. Maybe you quit. Maybe you have a death in your family. Maybe you are a caretaker for a parent. We are, if you're a millennial, um, around the age of 40 or so, most likely you're probably helping to care for a parent. Sometimes our parents may have been married or not married, sickly, not sickly. You know, you are pulled in different directions. There's a number of reasons outside of death why your paycheck might stop tomorrow. My parents, sometimes your children, unfortunately, our children have illnesses as babies or young toddlers that could pull you away from work. Spouses pass away, spouses get injured. Maybe you have a critical illness, relocate, a number of reasons, as you can see, as I went over why you might not have your paycheck tomorrow. So, we want to protect our income. So, let me pull this up here. So, Paris, how much income do I need to have, or how much income should I keep? One second. Okay, so how much income should I have? So that is going to be something that you ask yourself. So right here, you could very easily, if you are living a comfortable life, your income is comfortable, your savings is comfortable, your investments are comfortable, your family dependents and all of that are comfortable, and the amount of income you make today is perfect. Use that number. Say it's 100K or more. Say you're like, hey, my kids are older, I don't really need to worry about protecting that income later. And I'm sorry, I just started thinking about protecting your income after death. Let's think about if you're adding this on as something to help protect your income while you're living. And I'll tie in the death part too. I'm using my age and my daughter as an example. I'll be 40 this year and my daughter is 12. So let's think about, for right now, I am thinking about living until the age of 100. I have a 12-year-old daughter. I'm 40 years old. Um, Outside, really in a perfect world, I would love to, um, let's say, really, mm, let's see, 100 and honestly, knowing what I know now, I would want to double what my all states income or my previous employer income was. And I would want to do 11 years. Actually, if I did today, 12 years because she's 12. So as long as if I was planning for her life today, I would want to double a life she's been exposed to before. Um, as long as as she's been alive, I would want that many years of income. And I'm still thinking about me living until the age of 100. So that's why I doubled it too. So this is protecting my income while I'm living until 100 and my legacy for my daughter, because insurance, life insurance, things like that, that can be another vehicle to help you with home health care. Um, Especially if you're younger and you're not ready to buy an actual home health care policy, getting something like this early guarantees that you have something in place, because you don't know what the future has in store for you. So let's say 200,000, I'm looking at protecting my income while I'm living and protecting it while I'm gone. So that is 2.4. Okay, we're dreaming. So that's a dream, whatever. This is where I'm starting at when I'm protecting my income. Again, you can do this. You say, hey, whew, Paris, how much that gonna cost? I don't even want to know, honestly, not really prepared. But what I do have is $200 towards that. No problem. Let's show. Let me see if actually Okay, let me do that again. I am gonna just do no. So let's start. I'm gonna start with showing. I'm gonna show both of them, but let's start with Paris. I don't care what you're talking about. I have insurance through my employer. Let me see what you are talking about for my child. So, right now, for a 12-year-old little girl, $100 a month, a whole life insurance policy. I really like this layout because this kind of talks about what I'm saying. So, we're going to start backwards. Now, we're going to start with legacy and then we'll work ourselves backwards. But what I like about this, so here, $100 a month. This would be something that I would pay for. Would be in Janelle's. This would be with the intent of Janelle will take over once she is grown and able to afford this. If something happened, unfortunately, and my baby passed away unexpectedly, this would be the benefit that would be paid to the beneficiary. She's underage. I would be the beneficiary. I would have a contingent one just in case. You just have to think through it because me and my daughter are together a lot. So um, if we passed away together, who would be your beneficiary then? So here we go here too. So this is talking about Janelle. When Janelle is 69, she's 12 now. When she's 74, when she's 79. Actually, I did the math. And when she's 69, that'll be year 2082. I'll be about 97. We're living longer. Let's just say at year 69, I pass away. From her own policy, she could take out 173,000 just to take some time and figure out what she's going to do next. This is from her own resources. So act like this is if your parent passed away without anything, but you started your own policy somewhere at 12. If Janelle at any time from the start of this policy became ill, got a terminal illness, this money right here, these calculations would be pulling from all of this death benefit. So this is essentially allowing you to use some of your death benefit while you're living. So of course your health insurance will cover, your doctor, your hospital, some basic standard um coverage or things like this, but this is for extra benefits. If something happened to my daughter where she had a terminal illness, I'm pretty positive I wouldn't be working while she's going through that. So I would be able to use this to do that. We most certainly will be doing some extra special care and therapy. This is a lump sum that's paid for that. It's ranked based on the level and severity of the illness. So there's that. Let me go back. Let's stop. Now let me show you what it would be for $100 a month. And that $100 a month, if you think that death benefit amount is low or high, there's some extra riders on there. I protected the premium on both of these. On the one that you saw before for my daughter, that one also had one like an extra amount so that she can add an additional 20K at a certain age. That's to help just in case she becomes uninsurable and she wants to add more insurance. That's a built on rider where she can add that on later. So now we've thought about it. So that's your child, $100 a month for your kid. That's perfect to get them started. Then they'll be able to add to it when they get older. Now, say you are 40 today, you don't have anything, or you only have something through your employer. Paris, I have $100. This is also including some additional riders like for waiver of premium. So that's why that death benefit might seem, if you've seen another one before, it might be lower, but there's a lot of things that go into this. But right here, think about it. I'm 40 now. When I'm 69, I'll be on Medicare. Most likely won't be ready to retire because look at the 69-year-olds that you know right now, young, um, I might not want to work as full steam. So I could potentially take out this money and supplement my income. For something like this, I would probably definitely let it sit unless I had an emergency. This right here, if I wanted to start now, this is something I would add on myself because this could be a policy that is just for legacy if I die unexpectedly, but also think about if I need to go into a nursing home, if I need to hire um, someone, a chef or something like that. As I continue to age, this money would be available. I would try and keep it all the way until I'm 84. Before, I've talked about a customer I ran into, he cashed in all of his own policies because um his headstone was paid for, his funeral was paid for, his kids were grown. So he cashed in all of his policies, I think, except one. He was able to help pay for a mission trip for kids. He paid for 3 college tuitions and he's living his retired life. So this is definitely like this is an additional one that I would want to add to my own personal collection of policies. You want to keep upgrading. So every time you get a new raise, think about investing a portion of that towards your insurance. If you don't want to buy a whole new policy, think about sending in an extra payment. The same kind of thing like you're building a house, that's like your whole life insurance policy. Um, Here, another thing that's good for this, if you're 40, if you become ill, this would be something that I would be able to pull from so that I would not become a burden on my daughter, on my family right now. If you know me personally, it's me, my mother, and my daughter. So they would need some help. So this is when I would be able to use this and not have to stress about being on here trying to sell additional policies. So these are like what you would want to get started to start going towards getting to that 2.4 that I really want to protect my income. But we start here. We'll add it up for that. That's like 87,000. But think about it. We get something solid that's as a foundation that will grow. And this is what you can invest separately to accumulate more cash because we're young and we can grow from there. But here's that. We want to go back over the Paris acronym. Let me bring that back up. So here you can add this in. If I wanted to add mortgage, other loans, I'm just going to put 20K there. Final expense, I say off top, always have at least 15K. I'm gonna add, I'm not gonna add anything for these medical bills because I have additional cancer policies and this policy, these extra ones, this income one is included in there. So I think that's enough. Include dreams. I definitely for gifts, let's say 100,000 for my own living dreams. I definitely would want to go big. And then here is where I would put in other policies. So, other insurance policies. So I think for mine, I have about that. I kind of leave these blanks because this, I can't count on that. So for me, let's see, easily I want about $3 million in coverage. And I'll mix that between first starting with whole life insurance, and then I'll start to move into additional and that's including like cancer policy, but annuities, work, different assets to help get me towards having that total insurance need. So all of this to remind yourself that you have options. I want you to save this video and tag someone who needs to hear it. If you need help or you know someone who needs help, it is free to talk to me. Contact me and my information on this page. Thank you so much for listening. Remember, it starts with being informed. And for your homework for sure today, If your paycheck stopped tomorrow, what would change in your household? If you were no longer here tomorrow, what would change in your household? Thank you so much for dreaming with me, working hard to be your favorite parent.